Okay, Melanie, we're going to start with a few rapid fire questions, and you may answer true, false, or depends with a very short explanation. First question. Putting my boat in charter will create income that will help me qualify for my boat loan.
That's false.
I'm not buying my boat for another 2 years. Therefore, there's no need for me to talk to a lender or finance broker right now.
Also false. Very beneficial to speak with someone early to help you develop a strategy and make sure that you do qualify when the time is right.
Even though I don't have the best tier credit score, my strong credit history will help me qualify for yacht financing.
That's absolutely true. Remember, the score is only an indication of pricing, not necessarily the strength of the borrower.
We're here to make the entire yacht buying experience more seamless, as tax advantaged as possible, and enjoyable. And all too often, it's like going to the dentist. People get nervous when they have to talk to a banker, but I think we can help people. And I guess if I had one message, I would just say start early.
Hi, everyone, and welcome to this new episode of the Current Yachts podcast. We are here with Kimberly and Melanie from Newcoast, and we're here to talk about yacht financing. So what we wanted to get out of today is kind of the basics of, yacht financing 101. What do you need to know before you even buy the boat or even go shopping? What are the common pitfalls that you guys have heard about? What advice do you have, perhaps for first-time buyers, those sort of things? So, welcome to the program, Melanie and Kim. Tell us about yourselves.
Hey guys, thanks for having us on this morning. We are so excited to be here and talk about the pitfalls, navigating the do's and don'ts of yacht and boat financing. I have over 20 years of experience in this space, mostly working with Kim. We have been together a long time as a team. We've got a strong track record of standard of growth and working with clients, helping them successfully attain the boat of their dreams. I have been everything from a yacht finance professional to a national sales manager to leading a bank with their yacht finance programs, building strong relationships, building strong teams. But we both have a commitment to supporting our partners and helping this process be very easy and seamless for clients.
Yeah, that's what we're here to do too, is educate people. And trust me, it's one of the biggest topics that I speak to with our clients. So thank you again.
Well, you girls are fabulous with getting people to, talk to us early on in the process or talk to a lender and get pre-approved. I have a commercial banking background and I got sucked into marine lending just by virtue of geography. I'm in Annapolis, Maryland. So liveaboards would walk up the hill and talk to me about large yachts early in my career. Melanie and I have worked side by side for a couple decades and at various banks and lenders, which gives us really good charisma and karma in the booth. And it's like having field sense if you've ever played sports, like court sense. You know kind of what the other person's thinking. We can sometimes complete each other's sentences. So it goes back to white glove concierge service and one-stop shopping. That's kind of our goal. And it's always been, Melanie had some retail background and a lot of that permeates what we do.
So, we're going to kick this off with the first chapter of this conversation, which is really the basics of yacht financing. Just for background, we're talking here about the type of yacht that is typically going to be priced between, say, $200,000 to perhaps a few $1,000,000, because that is what our brokerage company, Current Yachts, is focused on. And there are going to be differences with smaller or much larger yacht, which we're not going to discuss just today. But with this, background in place, Amanda, let's do this.
So a lot of people have misconceptions about financing a yacht. And they think it's very much like traditional loans for a house or buying a car, things like that. So this is considered a luxury or recreational purpose for financing. And there's a lot of different risk profiles and understanding the standards that people need to have in order to qualify for yacht financing. So can you tell us a little about that?
We're in one of the lowest rate environments of our lifetimes right now. And a lot of people have recently refinanced their homes or in the process of refinancing their homes. And we always tell people, you need a house to live in, you need a car to get to work. A boat is considered luxury because it's more of a want than a need. So there are some pretty easy to solve misconceptions. They're easy to overcome as long as people go in aware and know what to look for. So that's our job, is to try to make people think ahead and look at some of the advantages of approaching things thoughtfully.
And so, one of the first thing, I guess, Kim, that I'd like to explain for our viewers, can you talk to us about down payment expectations and even terms, right? Because it's may not be quite like a house or a car. What is it like for yachts?
We tend to try to get people approved for the largest amount of money for the longest term with the least amount of down payment. And then from there, we can work to get discounts for someone who wants to put 30% down. The standard would be 20. The standard term would be 20 years. And if someone wanted to do 15, there are banks that allow us to offer discounts or sometimes even stack those. And then same thing with the term and the down payment being flexible.
Let me ask you this question then. You mentioned banks, lenders. You are a finance broker, is that correct? Can you explain the difference for those who may
Sure.
not know?
So very easily, a broker is someone like Newcoast. We're the intermediary. We understand the needs of the clients. Our goal is to match those needs of the clients to one of our many lenders that we partner with. So as a broker, we have access to a wide network of niche products. We handle all of the legwork. We compare options. We'll advise them through the process. We'll collect all the data. Whereas a direct lender, perhaps a bank or a credit union, they originate, they process, they underwrite, and they fund. So what happens is if you do not fit their box, you are basically done. By working with someone like Newcoast, a broker who has many, many sources of lending, we can offer a wide variety of products to our clients who don't necessarily fit in a single box.
Okay, that's very helpful. Thank you, Melanie. And another question I had, if I understand correctly, you can have a fixed rate loan or a variable rate loan. Is that true for yachts then?
Yes, in this environment, we are seeing predominantly clients or buyers that are choosing fixed rates, but we do offer variable rate programs for clients that have perhaps a goal in mind where they're selling a practice or a business or have an income event that's about to occur. So we can do a variable rate to keep the payments down and then term it out at the end of the 3 or 5 years.
That was going to be my question. Why would someone, want to get into a variable rate? And so that is one example. Can you think of any others that you've come across recently where it made more sense for your borrower to go into a variable rate?
Not necessarily a variable rate sometimes, but perhaps a variable term. So a lot of times we may have a client who has just recently or is in the process of selling his business and taking large distributions. And so at that point, whereas the loans typically are fixed interest rate loans from start to finish, if you look at an interest only product, which might be suitable for that client, they can large chunk out the principal, reduce the balance of the loan, and therefore reduce their interest overall the term of the loan. So there are 3-year arms, 5-year arms, 7-year arms, 10-year arms, interest only products, fixed rate loans for 20 years. But again, that goes back to the strength of working with someone like a broker who has access to multiple products.
Now that makes a lot of sense. Can you guys speak to the current interest rate? We know this changes all the time. That's one of the first questions we always get. Well, what are the interest rates these days? Can you tell us what that current interest rate is now?
Sure, I'm going to piggyback on what Melanie said. I had an example of a gentleman on a large valley from Northern Virginia, and he went directly to two banks. The broker that he was working with was selling a new boat product, and he was so discouraged after talking directly to the lenders. And he came to us, and we were able to position his rate ended up being much lower. So I would say we're in the mid to high fives to low sixes, depending on your circumstances. For example, if the boat's for sale here in Florida versus we do a lot of lending in other countries, there's a little bit different rate. So we're reluctant to just say carte blanche what the rates are doing. But suffice it to say, I haven't lost a deal for rate since Ronald Reagan was president. So, I mean, we have the best rates in town. It depends on what your needs are and where the boat is located, what your usage is going to be. Will you own it as an LLC? We close about 20 loans a month. That's one every business day. Last year, I think I had one person, maybe two, not own the boat as an LLC. So that
Interesting.
just gives you a scenario that helps you understand. We can help clients set those up easily and engage them with professionals that are licensed and bonded to do that. And it increases their ability to maximize tax advantages. So
Now that's interesting that the majority of your financing is in LLCs. That's interesting to hear for certain.
So, as Amanda said, these really are luxury products. Every scenario is somewhat different because the banks consider these as risk based pricing. So, it's not risk based pricing when you buy a house or a car, but there are risks involved when you buy a boat. And so, geography matters, use matters, credit score matters, age of collateral matters. So, it's not a simple answer when customers say, "What's the interest rate?" We can give you an interest rate, but that's not really what matters. What matters is all of the things that we just discussed that are part of the analysis and formula of what the interest rate will be at the end of the day.
And I'll use this too as a warning to people when they go yacht shopping is, take that with a grain of salt. When someone tells you the interest rate is X and then you want to put your boat into charter and you want to do this and you want to do that, your interest rate may drastically change due to those different things that you want to do with your asset. So please do get educated and talk to a very good finance broker to know what to expect when it comes to the interest rates.
That's a good point, Amanda, for sure. At the Annapolis Sailboat Show, there was a client that you and I were both working with, and before he got to us, to you and to me, he went and shopped rates, but he was looking primarily at boats in St. Lucia or boats in the BVI, and so he had like a false perception, and it was really easy to set his expectations appropriately. After like a day or two with us, we were able to get him pre-approved, and he had sold a portion of his business. And having spoken directly to one of our banks, we just didn't want to, there was a way we wanted to position that for him to help him make that be a positive, not a negative.
Yeah, that's very helpful. Before we dig into those qualification requirements that will vary from individual to individual, I wanted to ask, can you share with us what surprises, say, first-time yacht buyers most about yacht financing? What have you found is the most aha moment for these folks when you talk to them the first time?
Melanie, share that example of persistence that you had with the gentleman where you sent him the loan calculator. You were after him, he paid cash, and you were after him for over a year, and then eventually he saw the light, had the aha moment, and
I think that some of the big aha is honestly that it is more complex than they think. Like, I have a good credit score, therefore I should be approved. But there's so much more that goes into it behind the scenes that it's way more going back to that credit score. It goes back to core affordability, really, because a boat is a luxury. Not everyone can afford one, or not everyone can afford the one that they want or they think they can afford. So, again, it's our job to help set that expectation on the front end by helping them make sure that their income, their liquidity, their credit is all in line to achieve success.
That is the perfect segue actually into what are those requirements, Melanie. So, can we talk about the first one, which is the credit requirements entailing credit score, credit history? Because I understand credit score and the history of your credit could be two different things. You could have a great credit score, but behind it is not enough data for you to make that determination. Can you speak to that a little bit? Then we'll head into other criteria. But credit requirements for a borrower, what does that look like?
we had a client recently who was coming to us from the Midwest. He wanted to have a boat here on the East Coast, be a north-south boater, sort of follow the sun and the hurricane season. And he had an excellent credit score, as do many young professionals, but they don't have an extensive borrowing experience. So we're looking at your highest credit. Different banks feel differently, but my rule of thumb in the industry has always been, if the biggest mortgage you've ever had is 300, then we're not going to be able to get you a $1 million loan. We may be able to get you 600 or 5, but not $1 million. So clients are coming to us looking for 4 times the largest loan they've ever had, especially post-COVID, where someone's patented an app and made a windfall of money. They're looking for a tax-advantaged business use of the boat, like lake business use, and it becomes difficult because there's just not a lot of borrowing history there. Melanie and I sometimes we'll get the same clients and they hear the same thing from both of us. We had a client referred to us by different brokers recently, and He has a ton of liquidity. His income is off the chains, but the largest loan he's ever had is a $33,000 truck loan. And he's looking at boats that are $2 million. He could easily pay cash for that boat. It's been really difficult to get him more than $250,000 to $300,000 for the first big loan you have. Probably shouldn't be a boat. You should probably have some other borrowing experience. Now, correct me, Melanie, is that your perspective, or do you think there are workarounds for comparable credit?
Yes, credit score is an indication of generally how responsible you are with your credit. However, what really matters to the bank more than the score is the quality of the credit behind the score. How long have the trade lines been open? What's the highest trade line? What's the complexity of debt versus credit limit? How many mortgages have there been? How long have you had them? So, when you get to a client that has what the bank terms as a thin credit file, it represents problems when we go to look at a luxury item such as a bank. They're looking at historical performance on the credit history, and there's nothing to compare it to. So we will get either a counteroffer or we might get a decline based on lack of comparable borrowing history. And that is common.
And what about that typical minimum credit score then, just to even begin a conversation? Can you give us a sense of that? Anybody watching who is not sure what that even looked like?
Yes, I really try to stay away from minimum credit score unless we're talking about something that's really subprime in nature, because a 700 credit score can be a very good credit score depending upon the quality of what's behind it. So, if there's a lot of derogatories, that's a different story. But when you think about score, the banks use that for pricing purposes. An 800 score will give you a better interest rate than a 700 credit score.
Good point. Good clarification. It's like you will fit within the grid for the rate. But as far as qualification, can you say that again, Melanie? That's super important.
Absolutely. There's, as I said, an 800 credit score will give you a better interest rate than a 700 credit score, but it's not necessarily an indication of your credit performance. I have a client right now, super high net worth borrower, plenty of liquidity, but he uses his credit a lot and therefore his score has been suppressed. But it's no indication of his capacity to borrow for a yacht. It does have a bearing on what interest rate he will get.
We specialize in entrepreneurs, people that own their own businesses, people that have an entrepreneurial spirit. And the gentleman that I mentioned from the Midwest who wanted to be an East Coast boater, his score was in the high 800s. But he has lots of commercial trade lines, and as a result, his trade creditors inquire often. And so sometimes the reason for the lower score could be a good reason, that he's just a successful businessman who's keeping his trade lines current. He has a lot of inquiries. So it's not that every inquiry matters, but when you have constant checking, it does factor in.
Well, let's discuss debt to income ratio. That's a big one that people talk about. Can you explain that to us? What is debt to income ratio?
Yes, I can explain debt to income. As a matter of fact, Kim knows it's part of my spiel that I like to give customers. I call it the secret sauce. So, debt to income is part of your global picture when a bank is looking at you. It's your house payment, your car payment, the revolving debt that you have on your credit cards, your student loan payments. It's everything that goes into what you pay out every single month. And then we add to that the boat payment. So there's a cap on that. And it's basically a non-negotiable with the banks, what that cap looks like. It varies from bank to bank. But generally speaking, we're safe if we tell our customers the cap on overall debt to monthly income is 40%. That is a good number to use to strategize.
Gotcha. That makes sense.
And I just want to piggyback on that with the debt to income ratio. If you're making $1 million a year and you have a 50% debt ratio, that leaves you $500,000 in disposable income after you pay all your bills to live on. But if your household income is $100,000, that only leaves you $50,000 to live on. So I have seen some of our lenders for entrepreneurs buy at a higher debt to income ratio, but it's generally because they're in a different tax bracket and there's room there.
Right. And let's talk about the liquid asset requirements. How much does a lender want to see in the bank or liquid cash?
That's a great question. I think it's the number one thing that surprises people. a lot of clients don't want to have a ton of cash in their name personally in the bank. They have real estate investments and other things they're doing with their money. And I would say that would be the number one obstacle or hurdle that we come to, where we have to work with people. Banks don't mind if you have it in a business account. They may want to see you balance up in your personal account, and they don't mind knowing that you're doing that. They just want to know that in the event of an emergency, your surplus of cash is accessible by you personally. So,
Okay. And is there a certain percentage that they want to see of that liquid cash in the bank before allowing, let's say we're talking about $1 million yacht here?
Well, again, we're talking in generalities, so it does vary greatly from lender to lender. But what the bank does want to see is, when we talk about cash liquid reserves, we're talking about basically non-retirement liquid and non-business liquid. So what they want to see is that you've got the money for the down payment and that you have the reserves to pay your monthly debt for, let's say, 12 to 18 months in general. Some banks are higher, some banks are lower, but in general, we're looking for cash reserves. If you say 18 months, you're going to be fairly safe in your planning.
These are things that I'm always talking with clients about, and a lot of them are surprised about what it takes as a self-employed person to actually get a loan. And everyone knows who's self-employed that they want to make it look like they don't make a lot of money to the government. So therefore, they'll put a lot of expenses on their tax returns. But then when it comes to qualifying for a loan, they wish they actually made more money. So this is a big one that I've come across for self-employed people. Can you speak to that, Kim?
sure. I think what distinguishes our team is our wheelhouse is the self-employed entrepreneur. We look at an aggregate or a global cash flow. So that we look at the couple that's applying and their business, and we look at all of their debts and all of their income together. Anyone can get someone done that's a W-2 with an 800 credit score. But what distinguishes Team Newcoast is our ability to look at the big picture. We can add things back that are discretionary. We have some folks that have an American Express that all of their expenses go onto that Amex, and we can prove that it's discretionary and recurring, so we can add some of that back. Same thing with depreciation. Now that we've had accelerated depreciation and it's been legitimized this summer, we're extremely busy fourth quarter this year. And I think a lot of those people that have done this for the second time, you have to be keen enough. We had a client that had been declined by a competitor, and it was because he accelerated the depreciation on his boat last year, and they weren't wise enough to catch that it was a non-cash expenditure. It was a tax maneuver that was completely legitimate, and we could add that back in, and we were able to get him approved in 24 hours, which is unusual. I don't want to set that expectation, but it was just because we could catch that he had discretionary expenses that his accountant was good with. And I know you work with a number of forensic maritime accountants, and I saw part of your podcast with Mr. Worley, and it's interesting what a difference it makes when you have someone who's good at that, maximizing tax advantages, and then a lender that understands that is a big advantage.
Absolutely.
So, as a follow up to what you were saying earlier, where the liquidity requirement can prevent someone from actually qualifying for their loan, what other common reason do you come across for otherwise what looks like a qualified buyer on paper? What are some of the reasons that someone might get denied? We talked already a little bit about the strength of the credit. What else do you see on a regular basis?
So other reasons that clients may run into obstacles during this process might be inconsistencies in their package. For example, they recently switched jobs. They recently moved. They changed the way that their accountant does their tax returns. They switched from an S Corp to a C Corp. They stopped taking a salary. These kinds of inconsistencies, as the bank likes to look backwards to look forward, create concern for the lender. They're looking for consistent patterns and trends of income. So, for a client who might be looking at a boat a year out from now, it's always helpful to have that conversation early to say, listen, from a strategy standpoint, maybe you're not taking enough distribution. You're leaving a lot of money in your company. I run into this a lot with people in the construction space. So their balance sheet requires a decent sized balance. If they're bonded and doing construction sized jobs, they have to maintain a certain net worth of the company. So they may not distribute the income as much as they could to themselves. And that can be easily corrected in the next year by planning and strategizing what their salary needs to be, what their distributions need to be to qualify for the loan. Conversely, someone who wants to make a change like retirement, we always tell them don't retire in the middle of the transaction. And it's best not to retire till after the transaction is done. You're going to sell your company. You're going to get a big influx of cash. You're going to be able to pay cash if you want, but that's not beneficial. But what the bank's going to look at is they're going to say, the stream of income, the consistency of income is no longer there. So how do we underwrite this loan? So one way that they might be able to look at it is to say that you're going to get this big cash occurrence. We can take that cash occurrence and divide it by the 20 years of the loan or 15 years of the loan and see what that amortized cash balance brings in the way of income. But generally, it's not even close to what the entrepreneur has been making in the past. And that presents a problem.
That comes back to the preparation and speaking to your CPA or your financial advisor. A purchase like this for people that want to retire or sell everything they own and then quit their jobs and go sail the world. We hear that story a lot, and it really is a good idea to speak to someone like you and your financial advisor before making these decisions to be able to know exactly how to set things up so that you have the best decision-making process on when to pull the trigger and when to buy that boat.
And sometimes the time that you have ahead of you helps you correct something or put something in place that you may need in order to get the most favorable, condition for you to borrow and qualify.
Agree, Maryline. The earlier they come to us, the better for us to help them. And a lot of banks evaluate non-consummated ratio, but I think Melanie and I both built our commercial lending careers or our yacht lending careers on getting people to be comfortable and to qualify very, very early so that things go smoothly. As it's a very stressful time as you get close to the delivery date. So it's important to start early.
Since we were talking about things that can trip the borrower, things we wish we knew beforehand, what can we do to be better prepared? Is there something that you've learned from negotiating with a borrower, the following steps, post-survey, documentation concerns? Can you speak to that process a little bit in regards to that stage of the transaction?
Sure. So post-survey, when the client's deciding whether they want to accept the vessel and they're negotiating small things with the seller that they'd like to fix, I would say at that time, since you know you're going to probably reach agreement on the vessel, you would be looking at forming your LLC, speaking to a maritime attorney. If there are any tariffs, there's lots of good tariff avoidance, easy tariff avoidance strategies. If you think back just a few years ago, Florida had no state tax cap, so we were very adept at offshore closings and, shell corporations and foreign corps as owners of a vessel. So I think that's the time when you start thinking about how to structure your purchase appropriately. You may have spoken about it earlier, but you want to make sure you're spending your money wisely. So we usually wait until after survey to do some of those things.
If I could just add to that, I would say there's a lot of importance to paying attention to the details, the little things. So you might see a boat that you really like, and it may have high time on the engines, and that may not be of a concern to you, but it might be of a concern to the bank. Little things can lead to lengthy repairs or trigger repair concerns. So as they're going through and they're selecting their surveyor, they're reviewing the survey, pay attention to the details. Is there a smell that might be a warning signal of something more significant? Is the bilge clean? Does that give you some indication of how the boat has been maintained? The importance of a timely title and lien search to find out, is the boat owned by a trust? Is it tied up in a divorce situation? Could there be a deceased owner? All of these things add time and intricacy to the closing. So we want to be able to deal with those things early on and make sure that they're being addressed. So it is little things that that a lot of times customers don't even think about that can give you the wow, like, oh, I didn't anticipate that.
And to piggyback what Melanie said, some of that we can do early. Like we'll actually do the title work, the search a little early, because if it is owned by two people, one of the people on title is deceased or one is an LLC, we want to vet the ownership, make sure the appropriate person's signing the bill of sale. We're going to send a few $100,000 of your money or a few million. We want to make sure that we're not giving them the money without being able to perfect your ownership of the boat.
And then a few things we can add from experience too on details that can trip borrowers relate to charter and charter management. Perhaps you can say a few words to how charter companies need to be vetted, and also how do you factor in income from charter operations, if at all, right? So people have these questions. Kim, can you speak to that?
Sure, there are a ton of credible charter management companies, and since they're maintaining our collateral, we do some research, and we have lists of charter companies that have been vetted. If you'd like to be added as a charter management company to our finance approved list, we can help you through that process. It's not difficult. We've done it for so many years. We can make it an easy and seamless thing. But if you think about it, you're going to be far away from your boat potentially, and someone else will be managing it. And we have charter management companies, I say that not so much as a coffee mug will change hands on a boat that Amanda doesn't know about, so it's an important part of the process. And there's full-time fleet charter where it's a managed part of a fleet. And then there's part-time light limited charter primarily for tax purposes, where the client will use their boat and they'll block out the Google Calendar for the weeks that the owner would like. And then on the weeks that it's not being used, they may want to charter just to offset insurance and dockage fees and things. With regard to the income, maybe I can defer to Melanie. I know we know that it's there, but we're not calculating that as part of your debt to income ratio formally, right, Mel?
Charter income is considered by the lenders unearned income, so therefore they cannot count that towards your debt to income or your overall income. You may in your mind think, well, gee, I'm going to get 5,000 a week, 10,000 a week, to 12,000 a month, whatever the number is, to offset expense. But know that the bank's not including that. They're not including that. There's no record of it being earned income. It's not on your tax returns. Therefore, they can't consider it. Where that situation might change is in the event that you're buying a super yacht that comes with it a lengthy charter history. And part of the reason the attraction of buying that particular boat might be because of the charter history that goes with it. And it's documented, and that's a whole different story. But when it comes to charter, what's really important is to clue us in early that there is charter. Because if you're out there and you're shopping for an interest rate, I want the best interest rate that you could possibly get. And we
Right.
do. We get you the best interest rate. It's possibly with a lender that doesn't allow any charter. So now we've gotten you an approval that you literally can't use because we didn't know from the beginning that charter was part of the plan. And a lot of times clients think, well, I'm not going to tell them about that because it's going to cost me more for insurance or it might be a problem. But we need to know that we're a partner. We really need to know that so that we can do the right thing to help you get with the right lending bank, the right lending loan, and give you a loan that works for your needs. We could put you with a lender whose loan documents absolutely preclude any charter of any nature. And, then we just put you in jeopardy. So that's very important to understand the need of charter, the type of charter from the very beginning of the transaction.
And it is so specific. We could literally have an entire episode about the charter status of a vessel and its impact on the transaction. So if you have comments and questions, please comment. We can get those answered at a later time. I wanted to wrap up now with, all right, someone is now ready to call on to you, whether they're looking to buy a boat next month or next year. Can you speak a little bit to the application process, the turnaround, what folks can expect?
Sure. I think one thing Melanie and I would both agree on is getting an approval early is really important. I think that for a new build, we would do a builder's comfort letter. So the builder has all these different production slots. And a lot of our clients could easily pay cash, but getting a letter on letterhead from a credible finance partner does help the builders when they're buying resin en masse. During COVID, there was a building supply chain bit of a shortage, and they were able to, anybody that was pre-approved was covered by the builders. So that was nice. There's also, I know Melanie and I both make a lot of introductions very early on. So there are different people that form LLCs inexpensively and well, that are bonded, that will protect your family. And we make all of those introductions very early on so that those questions can be asked and answered pretty quickly.
And if you have not yet identified a vessel and you're trying to figure out for how much you might be approved, how long does it take you to make that determination, and what is it conditional upon?
The more complicated the financial picture, the longer the loan might take. But in general, I mean, allow yourself 3 to 5 days. We're like looking at a very major investment to think, can we get an approval in 12 hours? Sometimes. But in general, why rush the process? This is a very expensive investment that you're making, and you need to allow yourself enough time so that we can do our best efforts for you. I like to think that, it's a team effort. Us and our clients, we work together very much as a team, and and with transparency, with communication back and forth, good communication, we really can do, and trust is a real big part of it. So trust, transparency, teamwork, all those things go together to help deliver a great product for the client. But I like to think that in most instances, from start to finish, an average loan is probably 3 weeks, maybe 4. It can be done in less. But again, it's not a process that should be rushed.
Agreed. And sometimes there are surprises along the way, right? So you may have an initial approval or you have a sense of what you're trying to do. And then depending on the boat that you're looking to acquire, some things can come up, whether, as you said, it's on the lien search or a question following survey. So having that network of professionals that you can lean on, and you can make recommendations to other partners if you are not the ones to answer a particular question. The good thing about the marine industry is we're all very well interconnected with those specialists who can help support your client and our clients.
Maryline, thank you. And one of the things Amanda asked earlier, you'd never get in a car with a real estate agent and waste their time unless you at least had a cursory pre-approval. And all we're saying is that we would love to do that for you. If you're not sure about the boat, we will ask you what age range and what size range and what the needs of your family might be. We can select a boat, and once you're pre-approved, you can change the collateral out as you continue to shop around, and it puts you in the right price range with the right people. And certain brands, there are brokers that are connected to certain brands. We can certainly make introductions and things like that. So
can you speak to commitment letter and typically how long it's good for?
we had a customer who was a professor at Harvard. His wife had a small online jewelry store that was very lucrative. And they came to me 2 years ago and they were like, I'm buying a boat in 2025. What's your rate? Well, rates are only good for 30 days at a time in our industry. But we can vet them. We did everything that we suggested. We helped them set up the LLC. They actually ended up paying cash, and now we're working on recapturing for them. But the approval itself is only good for 60 days. We have people that buy boats like a new build. They were looking at 3 different really high-end brands, and we'll get them pre-approved in the fall. And it may take them through the spring to vet their brokerage boat, or their new build may be completing in the summer of the following year. So we'll just get them a pre-approval so that they know they're entering a transaction, and were the boat done today, they would qualify. So they have that confidence to move forward a lot of times.
Perfect. And just like that.
And just like that, you're a boat owner.
Any last words of wisdom before we part ways from Melanie, Kim?
I just would say, if you're thinking about buying a boat, whether it's a center console or a multi-million-dollar mega yacht, call your banker early. Kim Madigan, Melanie Jolles with Newcoast, we're both very welcoming of clients. Every person that comes up to us at the booth says, I'm buying a boat 2 to 3 years from now. Mm-hmm. We don't mind. We'd love to help you figure it out early so that you can proceed smoothly and, have one-stop shopping.
Especially in the sale market, not as much in the power market, but the sale market. They'll come up to you at a show and they'll say, 4 years from now, 5 years from now, I want to buy this boat. But what's good about that is they're actually thinking about it. They're getting that information early so that we can be effective in helping them. I mean, we love this opportunity to share our knowledge and help them be prepared for success. The most frustrating thing would be to sell your company, have the cash, want to buy this dream boat, and then find that your opportunities for finance are limited because we didn't strategize and help you plan in advance.
Yeah, that's probably one of the key takeaways is the strategizing and the planning in advance it takes to understanding yacht finance is really one of the things that people need to educate themselves on. So thank you for giving us that education.
We're here to make the entire yacht buying experience more seamless, as tax advantaged as possible, and enjoyable. And all too often, it's like going to the dentist. People get nervous when they have to talk to a banker, but I think we can help people. And I guess if I had one message, I would just say start early.
Mm-hmm. Yep.
Thank you so much, Kim, Melanie. We'll put the link to your website, where to find you in the episode. Thanks again. And
Thank
we'll
you.
see you at the next boat show or on the water.
Fair
Fair
winds.
winds.
Maryline, thanks for having us.
Thanks for having us.